cut. Change for us all. Isn't it? Restart.
Big move in Bitcoin then, in contrast to all the notes I wrote pre-show, which were telling me that this was going to put Bitcoin under pressure.
The narrative that perhaps this launch of these political meme coins will sap flows from Bitcoin is showing us that it's really not the case this morning. If anything, it's just accelerated the momentum and the excitement around cryptocurrency under another Trump
Hello.
Hi, 𝗬𝗍𝗿. What is all this FOMO about? Should I buy Bitcoin now?
Are you smoking your socks? You should rather watch my show. You should rather watch my show.
All right, legends. Let's do some technical analysis here on the price of Bitcoin. Are we moving higher? Are we going to crash here to the downside? What are the highest levels of confluence from a shorting perspective, from a longing perspective? Let's analyze the charts. Some of my alarms, legends, some of my alarms are going off, right? And there's also some people, even from an Elliot Wave perspective, that are speculating that the low could potentially be in, and this was a front running, and we are just going to go here back up to all-time highs. And I want to discuss that probability, go through the technical analysis, and let's determine if that is still, in fact, a possibility. Right, legends, this morning I did go through a couple of scenarios explaining to you guys from a bearish perspective. You know, we can still expect some upwards momentum. And now the question is, where can we reject if we are going to get a rejection? Because if this is building a three-wave structure to the upside, we have targets. If it's building a five-wave structure to the upside, we have some targets. Right, legends, and remember to smash up that like button, subscribe if you're not already subscribed yet to the channel. And let's get the party on the road. Okay, hi Dewald. I suppose I need to give some technical analysis here. Let's assess the high probable scenarios. I also saw, first, smash the like, yes, right. Whoa. Can this be? Do you guys know this chart? Okay, it might look a little bit funny with this line that I have over here, but I must say that the line chart has been very rewarding, and I have been backtesting it, and it's very, very rewarding for me at the moment, because look at the difference here, legends. If I go to the candles and I place the trend where I usually place it on top of the wicks, okay, I would have caught the breakout on link over here. Okay, but if you switch to the line chart and you use the D-line strategy, you would have caught the breakout a little bit earlier. And it's, I mean, from a risk management perspective, earlier is always better, right? So you drag your trend down, let it touch. You drag this trend down, you let it touch. And you can see that, I mean, every bit helps, right? Every bit helps. This line chart from a breakout perspective looks like it is right. Better entry, better risk management, okay? Link is popping out over here. What can I say? AR hit the 1-to-1 extension. It is exploding here to the upside. Bitcoin looks like it wants to continue momentum here to the upside. And now we need to go and assess the probability. So here on the smaller time frame, okay, we have made a low, obviously, right? Legends, we've made a low. Now the question is, if you've made a low, you need to see the following. You need to see a five-wave structure to the upside. You need to see a contracting diagonal, or you need to see a 1 2 1 2 1 2 3 4 5 4 5 4. You want to see that grind at the bottom, and you want to see the grind at the top. These are impulsive structures, and one could argue Maybe, yeah. I mean, you can zoom into the smaller time frame. I'm not going to go and break my neck there over the smaller time frames, legends. But there's a chance that you can count this as an impulsive structure, okay? And this is part of the corrective, very beautiful 3-wave corrective structure. And this could be a 1, 2, 1, 2, and it's now popping up for a 3-year to the upside. But we have targets, okay? Look at what happened over here. It also looked like a beautiful impulsive structure. Look at this structure. 1, 2, 3, 4, 5. Beautiful 3-wave corrective structure, and then we popped up and we fell back down. Okay, interesting thing to note, and this is all just technical analysis at the end of the day, legends. If I take a fib extension from the low to the high to the low, we tap the 1-to-1 extension for a C wave to the upside, A, B, C, and we fell down. Okay, we had that beautiful back test at the 0.88 and we fell down. Now the question is, that is the first level that I will be observing, looking at this structure. Okay, you can see that we have the 1-to-1 all the way up here at $84,707. Will this be the same corrective structure here to the upside? A, B, C, and we fall down. Exactly what happened over here. Right? Exactly what happened over there. Will this be the case? We don't know if we are forming multiple 1-2s or ABC here to the upside. What I do know is this is the leg that you want to be in, because it can get aggressive. It can go all the way up to the 1.618 and even the 2 extension over here. But let's just bank on the 1.618 over here as an extended target, because even if this is an A, B, C to the upside, the 1-to-1, the 1.236 and the 1.618 are all C wave targets, and this little bad boy is a 3rd wave target. So if this turns out to be a 1, 2, 3 to the upside and you tap the 1.618, then there's a possibility for a 4th wave, okay, like you had over here, and another leg to the upside. That could potentially even go as high as $92,000, $95,000. Will this be a possibility? Now that is the question, legends. So if let's zoom out a little bit over here. If I zoom out onto the structure, okay, there is still the chance, there's never a guarantee in the market. There is still a chance that you can come and claim this low, where this has been either an ABC here to the downside or a 1, 2, 3, and we are forming 4 and 5 to the downside, claiming the low, and then we start recovering back to the upside. I prefer this scenario, okay, although I know full well that we might not get it. And this is why I will be observing the price reaction as we hit certain levels to the upside, taking profits from my long and looking for shorting opportunities. I did get into a long in this little structure, and I'll get to that in a moment, right? My position is already protected, and my first TP area is here by the highs. I know that the 1-to-1 extension is a little bit higher, but I know also that this is a resistance zone. This, my friends, is a big resistance zone, high volume candle over there, 0.618 if I believe, if I'm not mistaken. So legends, if I take a Fibonacci, right, let's keep the technical analysis simple over here. Okay, I'm just going to use fibs, horizontal support and resistance, and mark out some levels. So first thing I want to do is I want to look at the volume inside of this range. Okay, this range, okay, let's call it this range. I want to look at the volume inside of this range. I want to see inside of this range where we have lows and we have highs, where is the most amount of volume traded? Because when price goes up, those volume areas can provide resistance, and when we fall down, the volume areas can provide support. So the easiest way for me to do that is to take a, a fixed range volume profile. Can everyone see that? Yes, a fixed range volume profile. And I just want to, get this whole price action in here. So I'm just going to take it from this little pivot to where we are right now. Interesting. So now I can see we are back inside the value area low. And usually, if you have a deviation, you go back to the top. You have a deviation, you go back to the bottom. Okay, then you go back to the top, you have a deviation, you go back to the bottom, you have a deviation. So there's a chance from a range trading perspective that you are going to find your way back to the top, which is at $90,000. Let's just make it a nice little round number, $90,000, right? Okay, but what's also interesting about this fixed range volume profile is that we have some nice high volume nodes. Nice high volume nodes over there and a nice high volume node over there. Right, there was also a legend this morning when I did my update. Okay, towards the end of my update, someone asked me, Dewald, can we short the 0.382? And I did say I like the 50% Fibonacci more, but yes, you can. I had my Fib there, right? And when I zoom into this structure, let me make it shorter. So I just keep the price action in there. Let me make it shorter. Let's go back here onto the 15-minute time frame. Someone asked a question just before I ended the live stream, because we said that if the impulse is not finished and there's still a chance to go lower, you need to reject at the 0.382 and the 50% Fibonacci. Well, this trade, in hindsight, played out to perfection, right? You dipped, you got the acceptance back below, you left the wick behind, you put your stop. This is exactly what I said in this morning's live stream. You put your stop loss above the high, and when price moves in your favor, you protect your position. Okay, you protect your position so that if you get stopped out, you don't lose money, and you take profits at support. This is exactly what I said this morning. If you were in class, you will remember. You take profits at support, and that's exactly what happened. Right, you tapped support. Guess what? If you did not pay yourself and take profits, you will now have been stopped out with no money. This is why it's important just to trade level to level. Okay, simple, isn't it? Simple, right? Now the next level that I'm watching is this little level over here, 50% Fibonacci. We have highs, beautiful highs, and usually when people short to the downside, where do they put their stop losses? Yeah, above the highs. So it would be nice to get that momentum here, stop everyone out, and then look for a shorting opportunity. If it grabs all of that liquidity and it starts trading below the level, that is a sign of weakness. I will have my stop above the high. I will enter here from a swing failure perspective. And remember, as soon as I hit support, TP1, TP2, TP3, and maybe you leave some of the position open. Maybe we'll even hit the TP4, because you have a chance. If you reject at this fib and at this fib, there is a chance to still come and claim the low. If you reject at the 618 or the 0.66, the golden pocket, then you decrease the probabilities of taking the low. You could still get a rejection, but you have an increased probability of forming a higher low and continuing momentum to the upside. Right. Though, and that's simple, legends. I'm not using Elliot Wave theory because some people tell me, Dewald, Elliot Wave theory is so complex, I don't understand it, right? I just use Elliot Wave theory to build extra confluence. I have now simply looked at volume. I have a massive wall of volume over here. That is a shorting opportunity. It's also the point of control of this entire range. This can definitely provide some resistance. A little bit further down, I have another wall of volume over here, together with the 50% and the Fibonacci. From a swing failure perspective, this is a day trader's dream to see the price action that he wants to see over here. Okay, and then a little bit further up, I mean, yeah, we just have volume. Okay, these two areas are the most interesting areas that I'm currently looking at here at the moment, especially this consolidation area. But I can tell you guys, the probabilities, once you hit this zone, yes, you can definitely get the rejection, but it increases the probabilities that you are not going to claim the low. Okay. It's just some rules around Fibonacci's that you can memorize. And yes, I have learned it from Elliot Wave theory, but you can learn and memorize these rules. When you tap the 0.88, you increase the probabilities of taking the highs, for example. When If there's aggressive momentum to the downside, as soon as you tap the 0.618 golden pocket zone, you decrease the probabilities of taking the low and increase the probabilities of making a higher low. And it's all just a game of probabilities at the end of the day. You know, you're looking at 70-30% probabilities, and we want to trade with probabilities. Trades don't always play out, and that is why we have stop losses. I got stopped out. I think Andy also got stopped out. Some of the coaches also got stopped out, but we got stopped out with such a small stop loss. Okay, we were speculating on this little short over here, and on the smaller time frame we actually did get the reaction. Okay, we did get that rejection at the level, and we're like, okay, let's enter with our tight stop losses here above the level, and then we got stopped out. What a tiny loss compared to the risk to reward that we would have made if we did get a successful rejection. And then we actually got the rejection at the next level. Okay, nice short, and you did hit the support zone. This little teeny weeny little stop loss over here, if you entered this trade and you took profits over here, it would have paid back that stop loss plus 3 times the amount in your account. Okay. Right, let me go through some comments. I want to hear, what is the sentiment out there? Do you guys think that maybe I should run a poll? Maybe I should run a poll. Okay, but let me ask you guys, do you think we are going to go? What are the probabilities? Do you think we're going to go to $85,000 or claim the all-time low again? First, which one comes first? 86, 85 or 70? Let's call it $76,000. Which one comes first? 1 or 2? Which one comes first? 1 or 2? Let me know. 1 or 2? Which one comes first? Right, 0.382 from the high of third wave to the bottom hit. From the high to third wave to the bottom hit. Yes, hello again, Dewald. Hugo, welcome. Dewald, the legend, back live. Back live where the market wants to go. Right, 1, 2. I've got some 2s over here. I've got some 1s over here. I've got some 2s. I've got some 1s. 89. 89. Oh, okay, 89. You think 89 over here, right? $89,000 over here. Right, number 2, down first, then more down. Okay, random. That's a little bit random. Lion, 2. Okay, most people are voting for 2 over here, right? We want that bullish spirit inside of us to become alive again. Okay, we do have some altcoins breaking out. Number 1. I think we're about 50-50 split here at the moment. Okay. What is Link doing? Is it still breaking out? I mean, Link just exploded here to the upside. It might not look like much, but if you played this little breakout here to the upside, 2% move with a little bit of leverage, okay, can be quite significant. But I mean, it's got the breakout now. I am not interested in FOMOing into a trade where it just, you know, guys, please, I do not FOMO into a trade once it's already broken out. I would rather wait for the retest. Okay? Wait for the retest. You can get a much better entry at the retest. Even if it continues to pump, it's going to come back for a retest. It's going to come back. It doesn't have to come back to the trend, but I mean, as long as it's pumping here to the upside and it makes a 3-wave corrective structure, you take a fib from the low to the high, the 0.618 50% Fibonacci, it finds support above these highs. That is your ticket. Do not FOMO into a trade over here because it could smack back down, right? You want the best risk management possible. Right. Let me just put it back here onto the candles, okay? That's basically what it looks like, legends, from a candle perspective. Link looks like it's ready to rock and roll. Obviously, Bitcoin needs to play ball, but Link, I mean, my alarm went off. Link looks like it's ready, okay? Some traders, a little bit of a trick of the trade. Some traders, what they will do is they will have their trend and they will have a trend over here, okay? And they call this the safety line. You have now 2 trends that's building over here. Some traders, how they play breakouts, for example, is, I just want to take these brushes out. And that one. Let's try again. Okay. When they play the breakout, so let's say they entered over there. and they put their stop. You're supposed to put your stop there, by the way, but you can be a little bit aggressive with your stop loss. You just increase the probabilities of yourself being stopped out, okay? What some breakout traders do, they do not know when or where to take profits. They don't know. But they have this line, which they refer to as the profit line, the safety line, okay? What these breakout traders will often do is they will enter the breakout, they'll put their stop below the low, and they will keep inside of the position, okay? They will not cash out, okay, until it breaks the trend. Then they take profit. It's a strategy that has proven to work. It's a proven, tested, back-tested strategy. They don't know where to take profits, but this line tells them when to take profits. Okay, yeah, I think that's the better way to say it. They don't know where to take profits, but they do know when to take profits. It's when it breaks the trend. Then they take profit. Okay. Right. Cool. Just a little bit of a tip of the trade from a break line perspective. So I do see there's still some people saying number 2 first. Sounds like a good strategy. Yep. What's wrong with the like button? Please, no more bear market. Yes. How many likes do we have over here? 54 likes. I know we can do a little bit better. It looks like the stream is a little bit in a bear market here at the moment. 114 people here on the stream, 55 likes. Okay, 56 likes. And I know we can do better than that, but also I know I went a little bit live, or I went live a little bit later today. I wanted to see if I can catch a new audience, right? People that haven't seen the channel before. So I'm trying different times throughout the day to see which time works best. And I have tried to run some polls in the past to ask people what time suits you best. But then you make some people happy and you make other people unhappy, depending on where you are from around the world. So I'm playing around to see if I can find the best time. Okay, cool, legends. Now, we have our shorting opportunities. Okay, there's a shorting opportunity. And I have to stress one thing, legends. If price continues to pump over here, as long as we are above the 0.5, I ain't shorting. Okay, I wanted to throw a nasty word, little word in there because, you know, I don't like the messages that I get after the fact. Please don't be that person that adds, okay? Rather, wait for price to trade below, okay? That is where you short and put your stop loss above the wick, okay? And, you know, we get stopped out all the times. It's a teeny weeny small little stop loss, okay? Then you wait for the next area, okay? If there's basically, legends, if there's no reaction, there's no trade. Because someone asked me this morning, Dewald, did you short the $83,600 area? And only after I ended the stream did I click the trading setup. I was like, yes, I remember speaking about that. No, I didn't trade it. Okay, because this is now the rule that I explained right here, is that if I go and look at this trading setup that I was watching for over here, it was this little bad boy. Okay, so let me do this. Let me take you guys back in time. Let's click on replay and do this. Okay, this was the structure that I was looking at. I had my FIB from the low to the high. And I said, legends, if we come back down, I really like the 786 level. It has support above the highs. And there was also a high volume node over there. I think I switched on, if I'm not mistaken, I used the VRVP. This was the situation over here. Okay. Yes, now I remember. And I said, this is a longing zone. We have a high volume node. Okay. I would be interested in a long if price dips below and gets acceptance back above. This is where I will be interested in a long. So why did I not take the trade? Okay, because if I now play out the price action, you will see exactly what I mean. So let's just be a little bit patient here and see what happened. Okay, let me make it a little bit faster. There we go. Let's put some music on. Right, this is taking a little bit long. I think I should have reversed price a little bit, but it's getting there. It's getting there, legends. I want to show you exactly why I did not take the trade, because I also highlighted this trade inside of our Legends Pro community. Okay, price is coming down. It's coming to the area. It's coming, and I'll show you now exactly why I didn't enter the trade. Because now imagine that this is now going to play out at that 50% fib level to the upside. Imagine, it's coming. Okay, it's coming. Not yet, it's coming. It's not coming yet, right? It's stuffing us around. Is it finding acceptance back above the 0.618? This is like rewatching a movie. If you ever watched the Titanic and then maybe this time Jack's not going to die. But he's going to die, right? Okay, let's see, legends. It's coming, right? I'm just going to let price play out here and show you exactly why I didn't take the long, okay? Let's just be patient. Let's go for the X wave. If it does not reach, would you entering around 3.8? If it does not reach 3.8, would you consider re-entering? We can go and check that out. God, in the moment. Okay, please check. Okay, Jack is here. Welcome, Elizabeth. Welcome to the live stream. Let's see. Guys, I rewinded it a little bit too much, it seems, okay? But I know it's going to come to the level because we know the price action. Let me just drag this. Oh, this was now basically that whole... this was Saturday. This was the boring price action on Saturday. Do you guys remember this? Do you guys remember me saying many times on Fridays when I do a live stream on Fridays, I tell everyone, please take a break from the chart on Saturday because this is what you get on damn Saturdays. Okay, that's what you get on a Saturday. And then you're in front of the charts the entire Saturday and all you got was nothing. Okay, small little movements to the up and to the downside. Right, and this price action is what created this massive volume node that's now at the 0.618. Okay, massive amount of volume that was traded over here, and it's most probably those 1 minute 30 second scalpers just range trading over here, shorting the tops, longing the bottom, shorting the tops, longing the bottoms. Okay. Let's drag it across. There we got the dip. We got the damn dip to the downside. Okay, finally we get momentum to the downside, and this is round about Sunday, okay, in the morning. That's when Sundays is usually when the price action starts kicking in, the volatility starts kicking in, and then that happened. Okay, no trade. We're still below the level. So this is what I wanted to explain to everyone. We fell down. We retested the 786 as resistance, and I told everyone as long as we are below the 786, I'm not taking the trade. This is what played out. Okay, if price did this, I would have most probably entered with my stop below the wick if there was a wick to the downside, and if I then got stopped out, I would have most probably said, yes, I attempted the trade. But there was no trade to be taken. Can you guys see? You need to dip below and do that. This is where I enter the long. This is where I put my stop loss. And because we didn't do that, didn't enter the trade. And there were some people that told me that they did enter the trade and they added to their positions. So if you are getting gutful of me, okay, if you're getting tired of me saying, please don't be that person that adds to their position, is because I still get messages from people liquidating their accounts. Because, Dewald, you said this is a longing zone. I longed like a crazy person. And then I liquidated my account. Okay. That's not how we trade, legends. That's not how we trade. Please pay attention in class, okay? Anyways, legends, the rest is history. So let me pause this over here and switch it off, take us back to where we are at the moment, right? But it's nice to play out the price action and see how you could have traded it better or not have traded it, right? This is also how I love to backtest trading strategies. I reverse the price action, and then if I'm testing the D-line strategy like a trend breakout, or I'm testing Fibonacci levels, or I'm backtesting the 0.88 probabilities or the 0.618 without claiming the low, this is how I backtest it. I go onto the larger time frames, 4-hour, 5-hour daily time frames. I reverse the price action to a point where I more or less don't know what the price is going to do, and then I just backtest. I spent the whole day just backtesting, making notes in an Excel spreadsheet. Okay, out of the 100 times that this has happened, so many times played out and so many times didn't play out. That's how you backtest a strategy. Okay, so I mean, you can even now see here on the VRVP that we have a nice little high volume node over here. So a wall of resistance. You can see support, resistance, resistance, support, resist, support, support. Okay, long consolidation area. We now have a wall of resistance over here. So if we do not reject, okay, someone asked the question, Dewald, will you play the rejection at the 0.382 again? No, I will not, because price is trading above. And as long as price is trading above an area of interest, you are not shorting. You are not adding to your position. Price has to move down below your area of interest if you're looking for a short. Then you know where to put your stop loss, and then you see the weakness, and this is where you enter. That is how you trade. Okay, so to answer your question, I think it was God, if I'm not mistaken. Okay, no, I will not short the 0.382 as long as price is trading above the level. And also, this looks, at the moment, it looks like a three-wave structure. This looks like a three-wave structure. And we do have three-wave structure targets. We have, you take a fib extension from the low to the high to the low. And now we have three-wave targets. The most common three-wave targets, okay, there's many, but the most common one where you get 7-8 times the rejection is at the 1-to-1 extension and the 1.236. That is the most common three-wave structure targets. So if this is going to turn out to be that lightning bolt here to the upside, 1-to-1, you can see that it's slightly above, okay, the 0.5. And because it's slightly above, I will consider an SFP from this high. And if it does, you remember what I said, I'm not interested in a short if the price action is above my area of interest. But I will consider a short from this level because I regard this as a new level. So if price does this and it's now below this level, I will enter a short over there with my stop above the high. And hopefully it gets the breakdown below these levels, but now you have better risk management and you are trading from a level that makes sense from a three-wave structure perspective. I very, very often trade Fibonacci levels and I treat them as swing failure lines. Okay, so that is the first area of confluence that I will be looking at. The 786, okay, so the most common areas is your 1-to-1 and your 1.236. These are the most common three-wave structure targets, the most common. A little bit less common and also considered rare is your 786, okay? But I will only consider a swing failure from the 786 if we tap the 50% and get a rejection below. I want my proper FIB retracement level to be tapped over there, and ideally you want to claim the liquidity above these highs, okay? Your 786 is a rare three-wave structure target, but a target nonetheless. Rare means it gets tapped 3 out of 10 times, okay? The other times it's these two targets. And then you have the extension target above, the 1.618, which carries the same probability as this one. Okay, but these are all levels where you can watch the price reaction and consider that short. Okay, so this is basically what I see here on the smaller time frames, legends. If, okay, let me just say this again because I know some people are going to forget. Let's switch off the VRVP over here. If price rejects, if price rejects here, 1-to-1 extension, it does not tap this line. It must not tap the 0.618, okay? If price rejects in this zone, claims the liquidity above the highs, this is the zone that I'm looking at, and we start falling down over here, it has a high chance that it can come and claim the low. And finally, even tap that weekly point of control that we have front run over here. If we reject successfully over here, okay, there's a high chance that price can take that level, finally tap it. Then there's the other scenario. Like I've highlighted this morning, you reject by the 0.382, you have to pay yourself when you hit support. So maybe we do get a successful swing failure over here. Remember, when you hit support, okay, you need to take some profits, okay, because it could also go back up and tap this area, right? It's never guaranteed, and this is why you have to pay yourself, okay? But if we do successfully reject over here, I will definitely leave a larger position open, maybe even 20%, 30% open for this low. If we do not reject and we keep on moving higher over here and we reject in this zone, I will take way more aggressive profit when we hit the support over here, okay? Guys, you need to go and watch some tutorials, and maybe I'll even make a tutorial how to properly identify support and resistances only looking at price action. It's such a powerful skill to have, okay? Because look at this. I literally, this morning, I said, guys, you've got support, and we hit support. If you shorted over there, you hit support. Look at where we got the bounce at support. Just identifying by looking at the price action. You look at price action long enough, you can identify support and resistance just by looking at the price action, okay? And it's usually at these consolidation areas. Do you see you have one above, you have one below, okay? You have this choppiness over here, and then, okay, you can see that this is support or resistance depending on where the price is below it or above it. But then you can see when you drag your mouse across, okay, oh, they also got the rejection here. So this is now support because price is above it. So anywhere where you are attempting a short, okay, this becomes a profit taking area, a TP1 if you will. This is your TP2 and this is your TP3. Okay. Right. Cool, legends. I'm not sure if I said that, but basically if you reject in this zone, okay, there's a high chance that you could create a higher low and continue momentum to the upside. Okay, because now you're tapping the 0.618. And the reason the 0.618 is so important is if you look at the structure here on the 1 hour time frame, okay, if I look at this entire structure here to the downside, let's just zoom out, look at the structure properly. And we're speculating on this 1, 2, 3, 4, 5. So this is the structure that could still play out. And this little fourth wave has an invalidation, and that is the 0.618. As soon as you tap the 0.618, you invalidate a fifth wave. Okay. Which means that momentum is potentially starting to shift. You're creating a higher high. You could come down, create a higher low, and continue momentum back to the upside. Okay. So that's basically what it comes down to, legends, is that, okay, this is the zone where you want to see the rejection if you still need to come and claim the low. Okay, now, legends, something I want to look at is I see that there are some people speculating. Say please, what's CVD doing? I haven't actually looked at CVD. Let's see what CVD is doing over here. I mean, I was watching CVD here on the smaller time frames, okay, before I entered my long. Okay, I didn't get a good long entry, but boy oh boy did I protect my position as quickly as possible. Okay, right, I entered my long in this zone. That's where I entered my long, with this little retracement over here. Okay, and there was bullish, there was bearish CVD all over the show. There was a mix of bearish and bullish CVD as we got the momentum to the up. You know, there's this zigzaggy price action over here. Even inside of this structure, there was bullish and bearish CVD, and I just thought, stuff it, I'm going to trade the price action. And you might be asking yourself, well, Dewald, why did you enter the long over there? Okay, let's go back into the 15-minute time frame. The reason I entered the long over there, okay, was because of this. I'm trading probabilities. I took a fib from the high to the low, and I saw this. Need I say more? I saw this, and when price fell down, I was hoping that it's going to come and claim this low, but then I was like, usually what happens is if you claim the 0.88, you retrace back until this golden pocket, okay? And when I saw this retracement over here, I entered there by the 786. When I took a fib from this low to the high, I entered there at the 786, okay? And I had my stop loss below these lows. So still great risk management, okay? Still a phenomenal risk management. That's what's important. And I'm looking to claim the highs, right? So from a risk to reward perspective, the trade made so much sense. So this is the zone that I entered. I was targeting the high and I had my stop below the low. So now you can see my stop loss was 0.26% away. So even if I traded with 100% of my capital at 100x level, sorry, legends, forget what I just told you. Even if I traded with 1% of my capital at 100x leverage, I will get stopped out before I get liquidated. Okay, please, not 100% of your capital at 100x. That's absolutely insane. My risk to reward is 6.72. And now, where we are now, you can see that my risk to reward has far exceeded. Okay, I now have 11.22 trade in the bag at the moment. Okay, right. And my position is now protected. I've already protected my position, which means I now have a free trade to the upside. Okay, I just want to see if I need to start taking profits, because when I saw the strength here to the upside, when I saw that candle close above the high, I did not take profits. If I saw weakness, I would have taken profits. But I saw a strong candle close above the high, so I did not take profits. My first profit taking area is going to be at the 50% Fibonacci. Okay, this is going to be my profit taking area. Sometimes I like to take profits just before you hit the zone, because I like to say, get out before the police comes, go home before people get too drunk, don't be the last person to leave the party, because that's when the crap happens. Okay, so I might just nibble at a little bit of profits now. Let me do that right now. I'm going to take some profits over here. Sorry, legends. I am managing my position while I'm doing the live stream. Okay, cool. There we go. Took some profits. That's what you need to do. And I do acknowledge the fact that we can go much higher. Okay, and then everyone's going to see, Dewald, you took profits over here. Look at where price is now. I don't care. I really don't care, right? As long as I have a successful trade, I'm happy. Because many successful trades equals money the end of the month. Okay, it's not about the epic trade that you caught. Sometimes a little day trade like this turns into a swing trade. But remember, I still have some of the position open. So as long as it's pumping over here, I'm still making money. And if it turns on me, then at least I have profits. Okay, so beautiful trade here in the back. But now you can see, legends, even with momentum here to the upside. Okay, this morning I said, this is not a longing zone for me. I'm not going to long inside of this structure. I need a retracement. Okay. And I did not trust this retracement for some reason. I can't remember the reasons why, but I mean, this was a nice, in hindsight, this was a nice zone to get into. Okay. I think Andy actually longed this little bottom here to the downside. But when I saw that 0.88, you increase the probabilities of taking the high, and we made the retracement, I put my stop loss below the low. I entered there at the 786, and now we got the momentum here to the upside. Right, so you can still get in with good risk management. Okay, hope that makes sense. Right, we must probably getting the rejection, if I'm not mistaken, at the 0.786 now at the moment. So I just want to put that fib back to see where we are. No, we can still go. I think this is just a small little pullback. Okay, if I look at liquidity, let's see where we are from a liquidity perspective. Almost there. I think we need to go grab that liquidity. I think there's a high chance to grab this, at least this liquidity pool at $84,297. But you can see that there's a massive amount of liquidity. So it could potentially go up and tap number 2 like everyone has voted for, right? It could potentially go up. And okay, cool, legends. Now something what I want to figure out now, okay? I see that there are people saying that the low is in. It's done. It's only up from here. We're never going to see this low again until the end of the year. The bull market is now back in full force. So I want to zoom in here onto the 8-hour time frame and see if it does carry a probability. So let me take the fib here out the way and look at the structure here to the downside. The only way that the correction can be done over here, okay, is if the impulsive structure from over here is not finished. This 1-2 has not created its 4-5 yet. This 1-2 still needs its 4-5. Then the low could be in. Where you have 1-2, 1-2, 1-2, 3, 4, 5, 4, 5, 4, 5. Because you have 3 1s, you need 3 5s. You need 5, 5. Oops, 5. Okay, so there's a rule that we can apply over here. The rule that we need to apply is to say that, well, then you need to take your fib from this low to the high, and you're not allowed to tap the 0.618. Okay, so which means I cannot take my fib from this low because the structure is not finished. I have to, because there's still people speculating on this is still a 1-2. And this is the 3. This is the 4, and now we're making the 5 wave. Okay, so that's basically what the structure looks like. Everything here in between is these 1-2s, 1-2s, 3, 4, 5, 4, 5, 4, 5. Okay, but this is 1, this is 3, this is 4, and we are still expecting one more wave to the upside. Okay. The 4th wave almost tapped the 0.618, but it didn't get invalidated because the maximum target for your 4th wave is the 0.5 Fibonacci. And that is now that local area that we are all watching for the potential rejection. Okay, so this 4th wave is still valid. Technically, it is still valid. Now, this is now where it becomes interesting. Okay, so let me just take these levels out the way, clean up the chart. Now I want to look at this corrective structure. Regardless of how you count the structure, okay, so what you want to do over here is this really does look like a WXY structure. It looks like a WX, and now the Y has to be over here. Then when I measure it, okay, from the high to the low to the high. Okay. This Y did not tap the 1.236. So it is a little bit weird that it didn't claim that level. So if we get the rejection by the high like we've just discussed, and we then go and tap it, I'm going to say that looks way better, because I want the larger time frame. Here on the 8-hour, 12-hour daily time frame, you want your FIB levels to be tapped because price becomes more accurate on the higher time frames. So it is a little bit weird, okay, that your Y structure did not tap the 1.236, which is a very common Y wave structure target, and so is the 1-to-1. If we tap the 1.618, no more Y wave. Okay, it's a very, very, very rare target for a Y wave. Very rare, below 10% probability. So, yes, legends, I don't want to be that person that says that we can't do this. Okay, all I'm saying is this looks weird. From all the corrective structures that I've counted, especially on the larger time frames, they usually tap the FIB levels properly and don't front run them, especially on higher time frames. But it's not an invalidation. So there's a chance that the low could be in. It just has to be said that there's a chance that the low could be in. Okay, so you have basically a three-wave structure in W, you have a three-wave structure in X, and now you have a, what is this even? Okay, a double zigzag in Y. Not a pretty structure, not a pretty structure. It would actually be better if X is over here, W is over here. That just makes more sense to me. Anyways, legends, the point, you know, I think I'm driving the point across is that this looks weird for me. Okay, that looks a little bit weird, but it is a possibility. There's a possibility that even if you count this as an A, B, C to the downside, the 1.236 and the 1-to-1 extension over here is also ABC targets. It's also WXY targets. It's a three-wave structure target. 1.236, 1-to-1 extension. Can the low be in? It has a possibility. Okay. Also, from a timing perspective, let's go check out the timing. Let's stick here on the 8-hour time frame. I cannot, so this morning I explained, and I'll go through that again. If this is 1, if this is 1, and this is 2, this is 3, and this is 4, this fourth wave needs to be longer than this consolidation over here, but it should not exceed the 4 extension. So this is what I would like to do, but it looks like it is in balance just by eyeing it over here. So if I measure this extension and I overlay it to the high, okay, you can then see that this correction from the high to where price is now is even before the 2 extension. So legends, I don't want to be against the scenario. All I'm saying is it has a probability. There's a chance that the low could be in based on the analysis that I've just done. It's not invalidated. This corrective structure and this corrective structure balances. This one is longer than this one. It's a big tick. That's what you want to see. Fourth waves are longer than second waves. Okay. Did it tap the 1.236? No, it didn't. But it doesn't have to. Okay. It is weird to see it, but it doesn't have to. The only thing that concerns me, I think the biggest thing that concerns me about the structure, counting it that it's not complete and we're still forming a 1, 2, 3, 4, 5 to the upside, is usually, okay, and I can show you an example over here. I actually have an example. Let me take the scribble here out the way. Let's go on to the 4-hour time frame. I want to show you this example. Okay, look at this one. You have 1, 2, 3, 4, 5. Then you have 1, 2, 3, 4, 5. And you make that something different. We call that micro. We make it a different color, make it green. And that's basically a 1-1-2 combo that we had here to the upside. Okay. Usually in these combos, your fourth waves retrace to the same zone. It can be a little bit lower, it can be a little bit higher, but in the same zone is where your fourth waves retrace to. Both your fourth waves. So this is your higher degree fourth wave, this is your lower degree fourth wave. It's very common in a 1-1-2 or in a 1-1-2 that your fourth waves of your larger degree and your smaller degree are in the same zone. Now, when you look at this structure that we are in right now, okay, it just looks weird. Look at this. You have, okay, let me do this. Let me switch it on for you because I have already counted all the waves in here. Okay, let me take all of this out and switch on, take out all the brushes. Where is my 1-1-2? There we go. Right, here we go. I've already counted the entire structure. Look at this. You have a 4, okay, and you have this 4 in the zone, more or less in the zone. You can see that you have these 4s in the zone, okay. There was another 4 over there. 1, 2, 3, 4, 5 in your number 3, but you've got your 4s in the zone. Now look at where this 4 is, all the way on its own, you know, visiting Aunt Sarah here in the Bundus. Okay, it looks out of whack. Do you guys see the problem? Because Elliot Wave theory is not just about technical analysis. There's a big section in Elliot Wave theory that speaks about the look of something. It needs to look in proportion. It's out of whack. Okay, that's the biggest problem that I have with this scenario. And I'm not saying it invalidates the scenario. I'm just saying it looks weird. Okay, this looks to me, this little structure looks to me more like it's correcting the entire structure because of how low we went over here. So it didn't invalidate the fourth wave. It just doesn't look right, which makes me believe that we have potentially maybe done this. Maybe we have done this. Okay, I can go and recount all the structures, but maybe the fifth wave is in. The structure is complete. Maybe 3 should have never even, maybe the green structure should have never even happened. Maybe the green, because in the beginning when I started analyzing this, I told everyone I'm not looking at this one. Okay, not looking at it. Right, this looks better from over here. So maybe this was just a 1, 2, 1, 2, 3, 3, 4, 5, 4, 5, done. And because this correction went so deep, it makes me believe that potentially the impulse is finished. I'm not sure what you guys think. Okay, you need to let me know in the comments what you think as well. Because if the impulse is finished over there, now you need to take a time fib from the start to the end of the impulse, and you want the low to be in after the red line, which is on 25th of March, 22nd, 25th of March. Okay, which means is not in, which makes sense. Okay, because you have not tapped the 1.236. You have not tapped the weekly point of control. Very weird that we front run some of these levels. So maybe, yes, you can get a relief rally over here. Maybe you get a relief rally, then you come and claim it, then you move up. That makes more sense because now you're finishing after the 0.382. You tap the level damn properly, and then you get momentum to the upside. Okay, and this is where I came up with these two scenarios. Okay, so if I now zoom back into this little structure over here, one of the scenarios that I'm looking at is, which I thought about this morning, is a contracting ABC to the downside. Valid, rules have not been broken, and what it does give us is time. It gives us the time that we need for the corrective structure to finish. You have formed an A, B, And now you are finishing the C wave here in a 1, 2, 3, 4, 5 in a contracting diagonal. 1, 2, 3, 4, 5 contracting, which gives us the time to finish the corrective structure after the 0.382, tap the level properly, and then move up. Okay, hope that makes sense. So this scenario is still on the cards as well. Can the low be in? Yes. Right, legends? It's just, I'm a day trader. I trade level to level. Okay. Is there a chance for a rejection? Yes, definitely. There's a chance. You know, what if we move up here and we reject here? That high volume node? Okay, what if we reject there and we fall back down? Or we make an A, B, C, and then we fall down like we did over here. Look at the first wave. Then you make an ABC back to the upside. Okay. Then you make for the second wave. Then you make an A, B, C for your third wave. So you can do the same over here, right? You can extend it in time over here, but you're basically finding support in this zone. Okay, and remember, legends, if you'd like to come and trade with me, you don't have an exchange that you're currently trading on, down in the description, I have this deal still on weeks, which is not going to last forever. Okay, it's almost done, the deal where you get that 50% cash back on the money that you deposit in your features account. And all you need is an email and a password, and you also get 25% discount on your trading fees. Bluffin, also, all you need is an email and a password. So, like to support the channel, come trade with me. These are the two exchanges that I'm using without any issues. I have to stress, I do most of my trading on Bitcoin. Okay. I see some people are complaining about weeks, but I also see some people are complaining about Bluffin, right? I have personally not had any issues, except when I tested these exchanges out in beginning phases, I had issues which they've now fixed. But I mean, I haven't had any issues trading Bitcoin. It has high liquidity, low spread. Haven't had any issues. Okay, cool, legends. Now, there's another scenario that I also shared this morning. Okay, a large WXY. Okay, I mean, I like this scenario the most from a psychology perspective because I think this is going to stuff with everyone's minds. Can you imagine if price just rock and rolls up here? It even goes and claims $96,000, $95,000. Everyone's going to say, higher, we're starting to change market structure. Maybe we are going to make that fifth wave to the upside, only to fall to the downside and claim these areas that we have not tapped. 1.236, okay, weekly point of control. And this is definitely still a valid scenario. Okay, so there is a little bit more bullish / still bearish case scenario. But what the scenario gives you is time. If the high is in and we still move up here and we still move down here, then we are finishing the corrective structure from a timing perspective where it has to finish after the 0.382, after the 25th of March. Okay, and boy oh boy, if we do get this dump to the downside, right, I'm going to be paying attention because it could get really juicy over here to the upside. And I don't think if we make a low over here, I don't think we're just going to hit $120,000. I think we're going much, let me not say much, I think we're definitely going higher than $120,000. Because the sad reality, okay, I just have to say it, the sad reality about this other scenario, let me put that back on, and this is what people don't realize, okay, everyone wants this scenario that I have spoken about. And now I have to go put this back in, okay, 1, 2, 3, 4, 5. I can see that everyone wants this scenario. Please, can it be the scenario? Please, can the low be in? But what they don't realize is that we're going to have a very short-lived low bull market we're most likely going to hit $127,000, $120,000, and then there's a high chance that we're going to start a bear market from this point. The deeper the correction, the more bullish the structure becomes to the upside. You have to remember that, because it invalidates this third and fifth wave. It tells us that the impulse has finished over here, and this correction, okay, is going to start a new, fresh structure back to the upside. Not just one leg. Okay. So I think it's going to get very, very interesting here for the price of Bitcoin in the coming weeks. Right, is Link still pumping? Oh, Link's still going here to the upside. Is Bitcoin still pumping here on the smaller time frames? Yes, I think it's can like to still be pumping. Guys, okay, I'm going to go through some comments. I just want to throw this into the folder because I keep on deleting it, and now we've got it over there. Okay, cool. Let's look at some levels. Let's go back here onto the 15-minute time frame. Okay, almost claimed that high. Oh, we're almost there, legends. Almost there, right? But I would not be surprised if price, I wouldn't be surprised if price does this. I wouldn't be surprised, okay? Because that X scenario could be in play. This could be a 1, 2, 3, 4, 5, ABC, and it could continue here to the upside, okay? Or you could have a nice little extended third wave here to the upside that can even go and tap the 2.618. We don't know how aggressive it can be. There's a chance that the local low could be in for now. Right, but you know, I've explained all the scenarios, legends, and it basically boils down to we're looking for shorts. We're looking for shorts. Okay, and depending on where price rejects, we know where to take profits at support. At support. Leave some of the position open for the low if you do reject in this zone. Okay. Right. And basically, we just want to trade level to level. Let me go through some comments over here. Look at daily RSI divergence. Okay, let's look at that. Choop, choop, choop. We have some bullish RSI divergence. Some people could argue, okay, I'm not an RSI trader, guys, not by any stretch of the imagination, but I can only imagine that some people are saying you have a lower low on price action, okay, lower lows, higher lows on RSIs, and that is a hidden bullish divergence. The target for this divergence from a trading perspective is taking the high. So if you're trading this, that's your profit taking area. Okay. Just saying, but I have seen many larger time frame RSIs don't play out. Okay, so that's why I don't use them as part of my trading strategy. But it is interesting to note because on the weekly time frame we also have bearish divergence. Okay. I just want to switch these things off. Do you guys see this? We have massive bearish divergence. You have higher highs on price action. You have lower lows on the weekly RSI. This is your target. Is it going to play out? I don't know. I don't trade it. It's easy. I do like to look at hidden bullish RSIs on the 15-minute and the 1-hour time frame. That, you know, and especially if it aligns with my trading plan and the support and the resistances that I'm looking at, that I find interesting. The larger time frame, hidden bullish RSIs and stuff, I don't find interesting because you have hidden bearish divergence here on the weekly time frame, but you have your stochastic RSI at the bottom, bottoming out at the moment. Now what, right? This says buy, this says sell. Now what do? You've got two indicators working against each other. And this is why I said sometimes too many indicators can create trading paralysis. And what is interesting is if you compare this to the previous bull market, the exact same thing happened over here. Higher high in price action. Okay. Hidden bearish divergence, the target was the low, we took it. It played out. The difference is when we made these highs, RSI was at the top. Now RSI is at the bottom, so it's not the same. This time is different. It's I don't have to say this time is different. It is really different. Look at the data. The data is showing us it's different. Okay, so very interesting. Hello, Dewald. Thank you for the alpha. What do you think about saying? You guys want me to look at altcoins, and I know as soon as I look at altcoins, okay, the viewers just drop off. I don't know. People don't want to look at altcoins, but I'll go look at say in a moment. If I don't work full-time, Dewald, join the team, find you the best on YouTube to follow. Thank you so much. I appreciate the kind words. Elliot says 97. Elliot says 97. Definitely a possibility because that aligns with the WXY scenario. Okay, if I go here onto the 4-hour time frame, it has a high probability, but it's still bearish, but it is short-term bullish. Guys, this is usually how I find directional bias. Okay, and this is where Elliot Wave theory helps me with directional bias. If I have two scenarios, bearish scenarios, okay, you have a bearish scenario that's still going to come and claim the lows. Okay, and I have another bearish scenario that's still going to come and claim the lows. But both of these scenarios says we first need to move up, either in a fourth wave or in an X wave. So I now have directional bias, which tells me that more than likely, okay, we are first moving up either to $86,000 or to $95,000, $97,000, like you've just mentioned over here, Elliot, Dean. So you're either going to get the X wave or you're going to get the fourth wave in both bullish case scenarios, but you're still looking for the lows to be claimed. Right. Cool. Let's go through some more comments. Smash the likes. Yes. What about SGS? You're not going to catch me this time. What about ice cream? You're not going to catch me this time. Right. The last time I saw ice cream, it was trading at $69. So let's just leave it at that. Right. Smash the like. Right. Am I missing WXY with continued daily RSI bullish divergence would signal 190k top later? Yes, I mean, legends, I don't like to talk about this scenario because a lot of people, it makes them uneasy and they think that I am smoking my socks. But it just has to be said, and I'm just going to spend 2 minutes on this. It just has to be said. And I love to play these what if scenarios with me. Okay, let me start with the most bearish case scenario. The bearish case scenario is the highest in. It's done. Tick. We have completed the bull market and we are going to invalidate all the models that says that the bull market is not supposed to be finished from a timing perspective. The bull market is still supposed to last until the end of the year. But we can count 1, 2, 3, 4, 5. This is now the A wave. I see some people are saying this is the A wave to the downside. We're going to go back for a B wave that either takes the high, it doesn't have to take the high. And I can just imagine a lot of people, when you make a B wave here to the upside, they think that's a fifth wave. No, that's a corrective structure. And then we're going to make a C wave to the downside. Okay, this is our bear market. And we have already started the bear market. So this is the most bearish case scenario that the top is in, but you could potentially still claim the top in an A, B, C flat, or you just make a normal zigzag, okay, where you make a lower high and you roll over. What is interesting about this scenario, by the way, okay, may I just say what is so interesting about this scenario is that it will still turn out to be incredibly bullish. If you have a 1, 2, 3, 4, 5, what do you get after a 1, 2, 3, 4, 5? The simplest corrective structure, you get an A, B, C. Okay, let's put a line. Let's put a line on there. After an impulse, you get a 3-wave corrective structure. Once you have an impulse, that becomes a 1. This becomes a 2. Then, ladies and gentlemen, we are going to have liftoff in a third wave, which is way more aggressive than this little bad boy that we've seen over here. Okay, because now you're going to have to take your trend-based fib extension from the low to the high to the low, and I mean 1.618. Then you're going to go and hit $200,000. But I mean, if you're in a third wave, you can go to the 2.618. You can go to the 3.618. You can even go and hit $1 million with this third wave to the upside. It could get absolutely crazy because you are inside a third wave. Okay, so this is the bearish case scenario. Okay, the bear market has started, which is still going to be turned out to be bullish. Okay, maybe it's going to come and claim these lows. Find support when you take a fib from the high to the low, maybe the 618, 50% Fibonacci, and then it finds upwards momentum again. This scenario will invalidate all the models that everyone has from a timing perspective, and it will finally break all the models. Okay. The 4-year cycles, where we have 3-year bull market, 1-year bear market, it will break those models. Right, but now, okay, this is where now the crazy part kicks in, where everyone is like, Dewald, how dare you? How dare you talk about things like this? Okay, are you smoking your socks? There is this scenario where we could have formed a 1-2, 1-2. And this, ladies and gentlemen, this latest structure that we have formed is the first wave inside of your third wave. This is now 1, 2, 3, 4, 5. And I mean, I've very conservatively put, I need to go into the log scale for this one. That's why the levels don't make sense. Okay, and I actually need to do this. I haven't updated the scenario in a while. Okay, that goes there. Third wave goes there. Fourth wave maybe goes there. Okay, and you know, and I have to say that these scenarios are conservative. What if? I'm not calling for this scenario. I'm just saying it hasn't been invalidated. What if this was the impulse? What if this was the impulse? It is done. We're not just going to go make that fifth wave and then start the bear market. Okay. What if this is the first wave? It basically is a triple 1-2, ladies and gentlemen. It's a 1-2, 1-2, 1-2, 3. And I mean this third wave. Okay. This target at $220,000, $230,000, I can tell you now, ladies and gentlemen, it is conservative. It can go to 300, it can go to 400. Dare I even say $500,000. This third wave can get very aggressive because you are now in a third wave of a bigger macro third wave. Okay, so things could get really, really crazy where this is 1, 2, 3, 4, 5. Okay, and where I have these targets is conservative targets. Then we still come back down for another 4 and another 5 to complete this 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So maybe I'm the only person that's ever spoken about the scenario. I'm not sure if anyone else has mentioned this scenario, but I am definitely still keeping an eye on this scenario, and it's not over until it's over. Okay, this structure is still bullish, and it still has a lot of breathing room to find support inside of this zone. Okay, to create a 1, 2, 3, 4, 5 inside of a third wave. And if by some miracle price does start rampaging like a crazy maniac to the upside, okay, we at least know about the scenario, that it is a possibility. And I think, guys, the market usually does something that no one expects. And I must be honest with you guys, I think the thing that no one expects is a bull market that's potentially even going to take us to $400,000. No one is expecting a bull market at this point. everyone is calling for the bear market. Everyone is saying that this is an A wave to the downside. We're going to have a B and a C to the downside. Everyone is saying that this is a 1, 2, 3, 4, 5 done. There are way more people expecting downwards momentum, and then a little bit less people expecting one more high, but not much higher. Okay, this is the cap that everyone is expecting. Most people don't even believe that we're going to hit $120,000. Most people believe that it's bear market time. Some people believe that we're going to hit 120. But I don't think there's anyone that is expecting a $400,000 Bitcoin. You know, and if you have a saying that says the market gives you what no one expects, well, then maybe it's going to give us a $400,000 Bitcoin that no one expects. Because I can tell you no one is banking on a $400,000 Bitcoin. Okay, but it would be interesting to see if the scenario plays out. I just have to put a disclaimer out there. I'm not in support of this scenario at the moment. It does not carry high probability. And the only time that I will say the scenario is starting to increase in probabilities is if volume starts going up. Volume needs to start doing this. As soon as we start finding a bottom here and it starts going back to the upside and volume starts increasing dramatically, I'm going to start talking about the scenario more. But if volume still is just flat where it is now, okay, while we're moving up, there's a chance that we can reject it at $120,000 area. Okay, volume is not supporting this move at the moment. If volume increases, it will give this scenario higher probability. Because when you create a third wave of a third wave, okay, you want to see this type of volume. You want to see massive volume starting to increase because the most amount of volume is in your third wave. Okay, so legends, and when I speak about this scenario, I really feel like the only bullish peanut in the packet. Okay, people laugh at me when I speak about the scenario. They're like, what is Dewald smoking? Okay, maybe I am smoking my socks. Who knows, right, legends? But the scenario is still valid and it has not been invalidated. Okay. And there's a couple of other things that also supports this scenario. Right, let's go through some more. Do you have a count that there's an extended fifth wave? An extended fifth wave for me carries low probability. There is a count where you have an extended fifth wave, but basically it is still one more line up. So it's basically still 1, 2, 3, 4, 5. And then it's done. So you have an extended fifth wave over there. You can't still make a 4, 5, 4, 5. Okay, that is not going to happen. What I have to explain to you is when you have a 1, 2, 3, 4, 5. Okay, remember the rule in Elliot Wave theory. When you take a fib, a trend-based fib, okay, Anthony, when you take a trend-based fib from a low of 1 to your high of 1 to the low of 2, usually, okay, let me just draw this again now that I have the fib over there. When you have a 1, 2, 3, okay, usually taps the 1.618 minimum target. Okay, it's considered the minimum target. As long as it's not the shortest, then you have a 4 and you have a 5. Okay. If your third wave taps the 1.618, okay, it significantly decreases the probabilities of an extended fifth wave. When you have a third wave that taps the 1.236 or is here between the 121 and the 1.236, so you have a very short third wave, then only do you increase the probabilities of having an extended fifth wave. Okay, you need a shorter third wave to increase the probabilities for an extended fifth wave. I hope what I'm trying to say makes sense. When you have a normal fifth wave, it is very rare and uncommon to then also get an extended fifth wave. Okay, and basically what I'm trying to tell you over here is that we've already had an extended third wave. So it decreases the probabilities for an extended third wave. Fifth wave. Okay. Holy crap, did I just have a bot attack here on the comment sections? Okay, did the bots just cruise in here and clean out the chats? Holy moly. Okay, wow. Right, and soon global country invest in adoption. I can see mods. I think you have your hands full. Who deleted all these? Junior, I see you have your hands full. Mr. Junior, thank you so much for the support and deleting all this, all these comments. Right, legends. Okay, I mean, I will go and delete these after the fact as well, guys. Please don't fall scam to these bot attacks. Okay. Just want to make sure. Please don't go and buy all these shit coins that these bots are recommending. They're just trying to take your money, pump the coin, and dump on you. Okay, or dump on you, take profits on you. Right. Okay. Cool. I see they are still pumping in here. I see they're still pumping. Trust the system. Right, legends. I don't even know which comment to go through because it's an absolute nightmare to find comments amongst all the bots. MK Alexander, first cycle with institutional investment that changes things on macro time frame. Yes, definitely. Okay. And now the thing is, I don't know what no one knows. Okay. Not just me. No one knows what this institutional buying power means to Bitcoin. Does that mean that it's going to break the model in terms of how long the bull market is supposed to last and we're going to go into a bear market? Or is that going to potentially give us a super cycle that no one is expecting because you have so much more buying power behind a cryptocurrency that actually still has a very low market cap? So I can't answer that question. But I mean, for me, it has a 50-50% probability. Okay. I would say the scenario that still carries the highest probability than a bear market is to at least still make one more high. This scenario at the moment carries the highest probability to still make one more high before we start a bear market. The bear market scenario or the super cycle scenario, I am leaning 50-50. I don't know. Right? I don't know. I want the super cycle. I cannot lie, right? We want the super cycle. If you know, and maybe, there's a thing to be said. If you look at the altcoins that has bled continuously, we haven't had an altcoin season yet. If you start putting the puzzle pieces together, we have not had an altcoin season. They are still bleeding. We remember altcoin seasons where you had like almost 100% pumps every single day, especially from good fundamental tokens, not just meme shit. Okay. And also when you look at this chart, the BLX, I'm not sure if you guys ever analyzed this chart. Okay. It's the chart on Bitcoin that has all the data since inception. Okay. And I switch off all the noise. Okay, this is one thing that still concerns me a little bit as well. So, okay, we have not completed the bull market. It needs to complete more or less in this zone. 1 month off, 1 month shorter, 1 month later, doesn't really matter. In the zone, it needs to complete. And we're only over here. So if we go into a bear market, it's going to invalidate this model. Okay, and it's never been disrespected, purely based on data. The other thing, if I do this and just clean up all the FIP retracements, do I have everything switched off? And I switch on the pi cycle indicator. Okay. I've spoken about this many times as well. If the data, okay, and I look at the candles here in front of me as data, if the data is going to do exactly the same as it's supposed to do, and it has never been invalidated since the inception of Bitcoin, it's never been invalidated, okay? Every single time we have broken out from the moving averages, traded above, and then the pi cycle top has flashed, and we went into a bear market. We went into another bull market. You trade outside the moving averages, your signal flashes every single time. There was the top. There was the top. Okay, and now we are here. So purely based on this indicator that could be invalidated, if we're going to start a bear market to the downside, we're going to invalidate this indicator. And for the first time in history, the indicator is going to be incorrect. But if it had to play out, let's say it does play out, it's not going to break down. It is going to flash. These moving averages still need to come together and cross over. Price still needs to trade above, and then only does the indicator flash. And you can already see here, just with my mouse price action, just trying to paint out the picture over here, you already, you're already here by $300,000, $400,000. If this had to play out, you get the indicator, we most likely, this will be the super cycle. We are going to hit $400,000, okay, which no one is expecting. If this indicator is going to play out exactly like it's played out, like it has played out, and right, the rest is history. If it doesn't play out and everyone calling for a bear market, you're basically saying that the indicator is going to be invalidated, it's going to break down. And you can see during some of the previous bull cycles, there has been times where we've traded below the red, what do you call it, moving average. Now we're trading again below the red moving average. But at some point it bounces back and it trades above. Maybe it's going to bounce back and trade above. Okay, so it's just interesting to think about these things. If you are wearing a cap from a data perspective and you look at the models that's never been inaccurate and you just say this time is not going to be different, people's emotions makes them believe that it's going to be different, but the data says it's not going to be different, then you could argue to say that we are going into a super cycle. If you are data focused, you could have the cap on to say we're definitely going into a super cycle. I'm going to put my emotions and Twitter and X and social media aside, and I'm going to follow the data. If you're not going to follow the data, you could then argue with the emotional side of everything, and this time is going to be different. We're going into a bear market. So very interesting conversation. I love to have these conversations with some of my crypto friends. Okay, it's a very interesting conversation to be had. Right. You just went over 3 indicators pointing for a bullish macro outcome. Exactly. So maybe I should put it this way, legends, and I'm here to be proven wrong. I make my decisions based on data. When I backtest a strategy and the strategy tells me that when you tap a 0.88, you increase the probabilities of taking the low or the high, and I do 100 of them, and 74 of them play out, and 26 of them don't play out, I follow probabilities. I follow the data. I trade probabilities. So I'm banking on the probability and I'm banking on the data until the data gets invalidated. So that is my view. It's not an emotional view. It's a data-driven decision. Okay. You are exactly at make or break at the moment. Yes, if Bitcoin wants to attract the whole world, it's going to 400K so everyone talks about it. Then dump so people will invest as whales. We'll say next. Yes, that makes complete sense, Bruno. Definitely, right? Can you imagine if Bitcoin goes to $400,000? I can imagine. If Bitcoin had to go and find its way back here to the upside to $400,000, this zone over here, this is where I see the euphoria. This is where I see people almost having that belief system that you cannot lose in the crypto game. That is where every single altcoin goes berserk. Even the stupidest, dumbest dumb of altcoins just pumps 100% every single day. Okay, that is where people sell pixelated pictures of rocks for hundreds of millions of dollars. From a psychology perspective, I haven't seen the craziness yet. I haven't seen euphoria. I have seen meme coins explode. here and there, doing crazy things to the upside, but not anymore. It looks like the meme coin vibe has disappeared, but I have not seen euphoria inside of this bull market yet. I haven't seen it, because I remember this bull market, that little top over there and this little top, that was proper euphoria. That is where I thought people are absolutely stupid. People have lost their minds. People spending their money on stupid shit. You buy an altcoin and it doesn't even matter at what price you buy, you just make money. This is the phase in the market that makes everyone believe that they are good technical traders, because it doesn't matter how bad your entry is, price just goes up. So it makes you believe that you are an exceptionally good trader. This is what wipes all of these people out. Oh shit, I'm not actually a good trader. We're going into a bear market. I haven't seen this yet. Not even here. Not here. Not here. I haven't seen the euphoria yet. And maybe we will get it only when we reach $400,000. I'm not sure how you guys feel. Okay, I haven't seen the euphoria. Maybe I'm sleeping under a rock, but I haven't seen the crazy euphoria. I will never, I cannot believe, you know, and I'm still struggling to get over it. You know, this was the NFT bull run. Do you guys remember the NFT bull run? This is where pictures of stupid things just sold for crazy amounts of money. I still have some NFTs of gorillas and stuff that I bought because of the hype. They are worth nothing today. I can't even give it away for free. Okay, and with some of them I paid ridiculous amounts of Solana and Ethereum to buy those NFTs. I also fell for some of the hype in here, thinking that I'm getting a nice little investment, thinking that I bought some of them for cheap. They are worth nothing. Even where we are right now, they are worth zilch. I can't even give them away for free. I haven't seen the psychology euphoria state yet. And I think we will only get it once we go to $400,000, $300,000. Only 5 alts hits all-time high. Exactly. We haven't had a proper altcoin season. The pi cycle top indicator has not flashed. We have not traded above the moving averages yet. Okay. The timing cycle says that the bull run still needs to continue. So there's a lot of indicators, like MK Alexander said, that there's so many indicators and data that is still telling us that the bull market is not finished, yet people for some reason think that the bull market is finished. So data is saying it's not finished. People are saying it's finished. So who do you believe? I trust the data. Okay, because you cannot let your emotions get involved with trading. You have to rely on data. Right, and if it gets invalidated, it gets invalidated. Then I'm going to say that, okay, now the data is telling us that it got invalidated. Now we need to reassess and maybe build a new model, and maybe we're going through a different, I don't know, legends. We will tackle that breach when we get there. But at the moment, all I'm telling you guys is I have not seen euphoria. And if we are going to go into a bear market from where we are right now, I'm going to say, well, this is the first bull market that I have experienced where we from a psychology perspective did not go into the euphoria stage. We went into disbelief and maybe some hope, and then we fell down. We never went into euphoria. Okay, and a bull market has to have an euphoric stage to it. And the euphoric stage happens when you break out from the moving average. Do you guys see that moving average? That is the euphoria stage. That. Look at how far we're still away from there. Okay, we still need to break out to create euphoria. Anyways, I think I've spoken too much, but legends, if you would like to come and support the channel, the education, the alpha that I provide here on a daily basis, it costs you nothing extra. I organized the best deals for you. Only need an email and a password to sign up to Bluffin and start trading. If you do want to verify, I do have Bybit and 𝗞𝗍cie as well, but you get the biggest sign-up bonuses and lowest trading fees by using the links down in the description, and it costs you nothing extra. Okay. in fact, you qualify for the trading discounts and the sign-up bonuses. Legends, I have run out of time. It's been a very interesting, nice little chat here with you on a Tuesday evening. And I will see you guys tomorrow again. Remember to smash up that like. I don't do NFTs really, but in for a penny for a free pound. We're rejecting here on BTC. Okay, what is BTC doing here on the smaller time frames? Okay, we've got the levels marked out, legends, right? Did we tap the 0.786? Maybe that's where we're getting the rejection. Remember to have this FIB. Okay, take your trend-based FIB from the low to the high to the low. There's your, okay, that's where we're getting the rejection at the moment. Can you guys see how well these FIB levels gets respected? I did say that this is a rare target, but you could reject. We just have so much liquidity above this high. It would be very strange to do this, okay? Maybe it builds a little bit of a bull flag and it continues to the upside. Right, but we have the 1-to-1 extension, you have the 1.236. Anyways, I have gone through all of these scenarios in the beginning of the live stream. I did say that this is a target. It is strange that we did not tap this high if we are getting a rejection at the 786. Okay, but now you can see how well these levels get respected from a trend-based Fibonacci perspective. I just want to see what CVD is doing here at the moment. Okay, we are forming bullish CVD. So maybe it's not going to fall down just as yet. Right, legends, have yourselves an amazing day, evening, afternoon, morning, wherever you are from around the world. I will see you guys in the next one. Cheers for now.